Welcome back. As promised, we have the management of StoveKraft with us. It was a strong quarter for them. Revenues grew 12%, profits rose by 13%. And we have Rajendra Gandhi, who is the managing director of StoveKraft, joining us now. Mr. Gandhi, good morning and thanks for joining us. Good quarter is what you had. People buying more pressure cookers perhaps that they haven't for the last 2 years. But tell us a little more about the demand trends. What kind of sustainable growth do you see in the second half of the year?
Yeah, we had a good quarter, and it was the comparable quarter for the previous comparable was also good. So I can say it was a good quarter compared to that equally good quarter. And we continue to see similar demand that we have been experiencing in the first half. There is an advantage of material cost, the input cost stabilizing. With this, we see that both on revenue and margin, we see that we can continue to be at the stable, steady growth that we are witnessing at the moment.
Mr. Gandhi, can you talk about the guidance that you've laid out? I think 10% volume growth for the second half of the year, revenue growth of double-digit, and EBITDA margins at 11%. Can you tell us what went into this guidance?
We believe that we are growing at this pace already. And of course, like I mentioned, the quarter bygone was comparable to a good quarter of the previous year. And we continue to grow as we have been in the past few years and several quarters. And the demand continues to be at the same level. And more of manufacturing, more and more of manufacturing is giving us a more advantage to pass on the benefits to our consumer. And so we are getting more competitive advantage in each of these products where we are able to get into manufacturing or getting into backward integrating of these products. So we are becoming more and more competitive. We believe that both the market is also growing, but we are growing a little more than the industry growth because we are able to pass on the benefits to the consumer.
Okay, good morning, Mr. Gandhi, and thanks for joining us. So you hold your guidance that you had given earlier for FY23?
We can say that we will grow at a good double-digit growth over the previous year.
Okay.
And that's what we have been maintaining.
Okay, good double-digit growth you can grow at for FY23. You were also talking about how commodity costs have come down, and even compared to last year, there has been a decline, but it's not really showing up in your margins. Is there a significant change in the pricing?
We did not take a hike in the second quarter.
Okay.
With the same price, we are able to retain more or less the margins that we have had in the previous comparable quarter. There was a decline in the margins in the last 2 quarters of last year because of high pressure on cost. But because of the stabilization of these costs, we believe that we can maintain the same margins that we currently have.
Oh, you can maintain the margins, what you said?
The current margins that we continue to have.
Okay, so about 11.6 to 12%, right?
Yeah, we will protect the 11% margin is what we are working on.
All right.
And the business definitely has to be positive of that 11%.
Sure. You protect the 11% margins. I want to understand a little bit about the consumer electrical segment, because over there you recently acquired Skava and you're looking to expand in this whole, LED bulbs, switches space. It's a very competitive space. Want to understand what kind of growth do you see there and what are the sustainable margins there?
Margin is for us, any product or channel, we have the same margins. It is product and channel agnostic. Whether it is the LED lighting business or the new Skava range of products or our regular cookware and appliances range of margins for us as a brand is the same that we maintain. On the growth, I can say that the Skava team is now fully integrated and we have started making the products under the Skava range. Apart from our LED lighting business, we are also witnessing good demand, good growth in the lighting business. It is relatively higher than the company's growth rate. And coupled with the Skava range, we will see that we classify this as the LED range, the lighting range for us. So we will see a higher growth rate in the LED business compared to our overall company's growth.
Could you tell us your plans to expand your distribution footprint to any new product launches that you've lined up?
We are in several of these categories that we operate. We continue to offer new product and new models. Apart from this, the new launch that we have recently tested in Kerala was the induction cook. I mean, sorry, it was the air fryer that we launched, and we saw unprecedented kind of acceptance from the market, from the Kerala market, and we are rolling this out to the whole country. But in the various categories of products that we operate, we continue to innovate and give new offerings to our consumers.
Okay, just another question I wanted to ask you was that in Bangalore, you did open a new store for the Pigeon brand. I know that you're looking to open 40 more. Can you take us through the kind of capital that you will need for this?
Last time when we had only one store, now we have 18 more already, and we believe before the end of this year, we'll be able to open up to 40 stores.
Okay.
The capital generally goes into three buckets. One is for the rental deposit that we pay, the interiors that we invest on, and the inventory that we stock at the stores. It is on an average of about 15 lakhs per store.
Okay. All right. All the best. Thanks a lot for joining in. That's StoveKraft. Decent performance last 3 months. The stock is up almost about 15% and not bad in terms of earnings as well. Let's take a short break. Up next, Rishi Kohli, the CIO hedge fund strategies at Incred Alternatives, will be with us to discuss the way forward for the market.